What is happening, best ever listeners? This is Matt Faircloth, and welcome to the Best Ever CRE show. I'm your host, Matt, and this is my episode, Next Level CRE, coming at you on Fridays. I'll see you this Friday, next Friday, the Friday after that. Come see me here. Guys, I'm going to reach into the Best Ever toolbox real quick. This is a toolbox of all the different things that Best Ever can help you with in your business. If you are a rising, getting to the next level any minute now, a real estate operator, just like the rest of the Best Ever listeners, Best Ever can help you. Best Ever can help you get to that level. Here's one thing I want you guys to do. Go to bestevercre.com/community. Join the Best Ever community. It's free, right? That's free. That's right. Why not free? Join it. You got to be a seasoned operator, meaning like 1 or 2 deals under your belt. So a little bit of real estate experience you can get in. And there is a ton of other seasoned real estate operators in there having regular real estate conversations on a daily basis, talking real estate shop, talking about all things real estate investing. Maybe you can network with them. Maybe you can raise capital with and for them. Maybe you can join them in ventures that they're on or network with them and help yourself get to the next level with those in the Best Ever community. So what are you waiting on? Go to bestevercre.com/community and join the Best Ever community with all the other cool kids. We'll see you in there. Guys, my guest today is Kathy Fettke. I'll just say, I know her very well. She's a host of her own show. She's been doing this for many, many years, 20 years or so. We get into a great conversation of her origin story, which it's always cool to hear people really interesting story that she has on getting into this industry. And then I want you guys to listen until the end to hear her take and her strategy on how she's going to be taking advantage of some real changes she sees happening in the economy. Perhaps right now is the best time for you to get in on deals that could perhaps double in the next 5 years. Kathy has some real metrics on that. So let's hop in, bring Kathy into the studio and start to unpack all that. Best Ever listeners, my guest today is, again, I say this a lot because I got a lot of friends in the industry. I guess is what happens when you've been around for a while. But when you get to interview one of your friends, you look forward to it because it's just going to be, it's like a chat, right? So I'm looking forward to having a chat with my friend Kathy. Guys, this is Kathy Fettke, who I met many, many years ago. And it was one of those times where I used to go to conferences, Kathy. I still do sometimes. And I see people with like, there's different talks and strategies. And then there's somebody like Kathy rolls in and she's got charts and she's telling you what's going to happen. And a lot of times what she says makes a lot of sense. And she's typically right when she tells you what's going to happen. Because I remember talking to Kathy many, many years ago, if you don't remember Kathy, at the the Mid-Atlantic Summit. And you told me that you were worried, this is like 2017, that you're worried that all these CMBS and bridge loans and whatnot were going to come due at some point and things were going to change in the economy, which would change those bridges. That you kind of predicted it. You kind of saw the future, my friend. And so I've enjoyed hearing your thoughts on the economy, your thoughts on business, your strategies. So Best Ever listeners, let's give lots of hearts to my good friend, Kathy Fettke. Kathy, welcome to the show.
Goodness, thank you so much. I'm so happy to be here.
So here's something that folks don't know, right? They think that you and the host of the Real Wealth show and a host, as you and I have shared stages on Bigger Pockets as well. They think that that's your jam and that you're so good at it. You're born into this game of real estate, but you have a whole nother world. There's a whole nother Kathy Fettke that people might not know that before real estate. Can you tell us a little bit about your prior real estate world? And I'd love to hear more of that story.
Well, there are many versions of the prior me, but I think you're probably referring to my broadcast career. But before that, you probably don't know that I owned a talent agency in San Francisco.
What?
Yeah.
Are you serious?
Yeah. If you're an entrepreneur, you just are, and you can't not try to make money off things, even young. I remember being 16 years old and my dad had this beautiful garden and we would make the most beautiful meals. And I thought, what a shame we're not sharing this with neighbors. And so I put on luncheons and I would charge $20 back then. It was like probably $75,
Yeah.
And for a home cooked meal, like farm to table, literally. I learned very quickly that I was probably spending way more time and money on that business and losing money, but it was fun.
Yeah, but that's so great. So farm to table, talent agency. What kind of, was this like TV talent or like movie talent kind of thing? It
ended up being that. And I got to have a dance with Sean Connery at the after party for The Rock. This is definitely aging me, but
goodness.
Yeah, it
I remember
started.
that movie.
It was a great
I'll
movie.
age myself too. I remember that movie. Yeah.
It was a super random thing that happened. I mean, I always kind of knew the things I wanted to do, and I've been a big believer in following your heart, doing what you love. When you're passionate and excited about something, that creates this kind of energy and this attraction that you get what you want. If you're kind of like tired in your role or you're just not that into it, it's just really not it's not gonna work. It's not gonna work. You got to find that thing that gives you spark. And so what gave me spark was when I was 21 years old, I was sitting in a bar in San Francisco in the Triangle District. If anybody knows San Francisco, that's like where the kids go. And somebody bought
that's
me.
That's where you go when you're 21 years old looking for a bar. You go to the Triangle District.
It's the Triangle, man. That's where you go. I lived in San Francisco, and someone was like, "Here, will you try this drink?" I'm like, "Free drink, yeah." It was Jägermeister. No one knew what it was at the time. I actually liked it, and I ended up getting.
You're the one person that liked Jägermeister. Yeah,
I am one of the reasons it took off. No one knew what it was. They were like, "Oh, she likes it," and I was one of the first Jaeger girls, and I was literally paid.
You were a Jägerette.
I was a Jägerette.
Man, back in my 20s, I dated a Jägerette. That was one of my high points of my career. Don't tell my wife Liz about that. But one of my girlfriends was a Jägerette at one point. So so you tried this Jägermeister drink, and you were the first Jägerette for Jägermeister, right?
You're very early on, one of the first.
Just convincing young knuckleheads and hey, you should try this stuff, right?
It wasn't hard. We'd go in the bar and buy people shots, throw them t-shirts, dance on the bars, whatever. It was fun.
It was the best job ever, right?
It was the best job, and we were so good at it. I'm saying this because it's just an example of how you can literally make a career out of anything and something you love, which at the time I was 21 and I loved bars. Yeah. So we were good at it. So Bud, Coors, like all these brands would come up to me and say, "Wow, can you throw these parties for us? Help us with our brand." And so I started a talent agency, basically marketing liquor to different bars. And then I met a casting director in one of the bars, and he's like, "Who are you? And who are all these women you're with that are just drop dead gorgeous?" And I'm like, "Well, I'm
wearing
Kathy."
Coors Lights t-shirts.
How do you not know who I am? But it turns out he was a casting director, and he's like, "Wow, I need these women for my movies." So I started a talent agency, and I booked these Jägerettes and Coors Light girls and everything into movies.
And they were in a movie during the day and a Jaeger girl at night at a bar.
Yep.
Every 23-year-old woman's dream, right? Yeah,
exactly. I was kind of the boss of San Francisco at the time.
Oh my goodness! Did any of the women that you represented at the time ever take off in the industry? Is there like, you represented Christina Applegate or something like that, or somebody that just blew out with it? No, not so much.
No, honestly, what happened is I met my gorgeous, wonderful husband, and I didn't.
Good man.
Technology wasn't really there yet. I mean, we're talking the 90s. So we were still bringing in talent with headshots. Nothing was online. It was hard work. There was a night my casting director called and said, "I need 100 babies tomorrow for this film." I'm like, "Where am I going to get 100 babies?" There wasn't. And there wasn't the internet. I'd literally be calling, "Hey, do you have a baby?" And I met Rich, and he's like, "What are you doing? Like, we had a date tonight, And so I chose Rich. I sold that business and chose him.
Oh, that's great. That's great. That's great. And somebody else got it. They found the babies on the internet when the internet got popular and everything like that.
Exactly. Yeah.
Yeah.
Well,
so then we move over to, you chose Rich, but then you chose broadcasting and Rich at some point, right? How did you get into broadcasting from shutting the talent agency? Then you got into broadcasting. Is that the transition from there?
Yeah. I mean, I graduated from San Francisco State in broadcasting. I worked in the newsrooms of CNN and ABC7 and KTVU. And I took a break from broadcasting to kind of to start this company that I had, the modeling agency.
Oh, I see.
Because I was not making a lot of money back then. I think it was, I don't know. You have to become a big star to make a lot. So I made a lot more in my business. But then when I gave up that business and sold it, I wanted to get back into broadcasting. And, it was really my passion as well. I loved it. But also at the same time, I couldn't stand how negative it always was. And the stress levels were insane. I mean, it was back then when you really did have to like actually do news and tell the truth and give both sides of it. And everyone was competing to get the story. And if you didn't get the story first, boy, you wouldn't be the one that everybody watched. So it was hard. And then I had to be part of a union, and I ended up being like 9 months pregnant, and they wanted me to march the streets in San Francisco to all night long. And I was just like, you know what? I don't want to do this anymore. I was done. I was like, you know what? My wonderful husband, Rich, is making enough money in his coaching career. And he also owned small fitness center. I was able to just live my other dream, my next dream of being a stay-at-home mom.
Yeah. There you go. There you go. But you were at some point on the camera as a newscaster, right? You were, read the news. I agree. The news is negative. I tend not to watch. I watch people like you that are going to tell me in a more neutral fashion what's going to happen and what I should do about it versus watching the news that just focuses on the horrible things that just happen in the world, right? So you were, until that, just obviously I could get how it didn't serve you, but that was what you were doing, right? Like news reading and that. Yeah.
And reporting. And it was just like, honestly, how many fires and murderers do you want to see, especially when you've got little kids and you're pregnant? I just was like, I don't want my baby in my womb to be exposed to all this negativity.
Yeah. I think or even your own brain is exposed to the negativity, right? Because you become what you surround yourself with, right? So
that's what it felt like. And it was every day. It was negative. And so I decided to keep a weekend radio show. I negotiated that, and I tried to do like a good news show, positive news show. And I'm full honesty, no one cared. The human brain loves a tragedy. They love. Right. And
why are you telling me about all the good things? I want to hear about car accidents.
Yeah.
I want to hear how much traffic there is. I want to hear about who got murdered last night, Yeah.
Yeah. So it didn't do very well, but I still did it for an outlet. I wanted to at least express myself and try to bring some positivity to the airwaves. And then, so that's my background.
Yes, people keep trying that positive news thing. I remember during COVID, the guy, I forget his name, was from The Office that did a YouTube show called SGN.
It was so good.
Good news. It was great. And you need something, right? And that, but I just to me, that was a breath of fresh air, especially during COVID, but you needed like a little hug or something like that, But I wish there were more things like that, because there is a lot of positive things happening in the world, right?
Yes.
It's just about what you choose to put your focus on. And that's why I'm like, okay, I just don't watch the news anymore. I might read the headlines for like 5 minutes, mostly business stuff, things that are going to affect my finances, things I can control, right?
Yeah.
But aside from that, I kind of don't care who had a fire and what happened here, what happened there, who's at war with who. I mean, seriously, I gotta focus on things I can control, right?
Well, then you've been able to control your monkey mind, because most people are still really attracted to it. Like even the Texas floods, I'm like, I want to just send money, I want to donate, I want to help, but I don't want to know the details. And then I find myself looking at the details and just being depressed. Horrible.
No, I don't want to know the details either, because I mean, not to get into it, but I got young kids too, and I was like, shit, look at this, everything like that. There's plenty that is designed to catch your eyes and all that, and to pull you into that negative land. It's actually, it's tough to get positive reinforcement from the outside world. It's almost you must to get that internally. I mean, I read positive reinforcement books. What do you do to keep the smile on your face? Because you're always a very positive oriented person. How do you keep your energy in a positive state, given the newscaster space and seeing the tea leaves of the economy? What do you do to keep yourself in a good positive mindset?
Oh, it's a constant effort, because I feel like there are times that if I don't work on it, I can go and fall into a trap of depression or just loneliness or sadness or whatever. I don't know if that's like a natural thing, but so the minute I even start to notice that, I'll either work out, I'll go out and put my feet on the dirt, do some yoga in nature, get in nature, eat well, drink a lot of water, like take care of this body of ours that's carrying us around and work so hard. Like, can you imagine having a 60-year-old car, and you didn't take care of it, or even a 60-year-old house that you didn't take care of? Like these bodies have been through a lot, and we need to
war. Yeah.
Yeah. So I kind of like listen to my body. Like, what do you need? Oh, you definitely exercise does it every time, especially a really good sweaty one, like a hardcore.
Mm-hmm. Oh, man.
It's super important. Muscle building is important. Eating well, staying away from packaged foods and trying to just eat fresh. That's usually, and then laughter. If I'm ever really sad, I'll just put on a comedy. I love a good laugh.
There you go. Thank you. Thank you for that. I just got have you tried meditation? I just got into meditation a couple of weeks ago. My lovely wife, who's been doing it for years, was like, knucklehead, start meditating. It's going to help. I promise. Right?
That's so funny. Rich does it every day.
Does he?
Yeah, I sit with him.
He's so zen. He's like
so perfect.
He's like a walking Buddha, that guy. I mean, yeah. Okay. Yeah. Well, I finally listened to my wife, and I've been doing it the last couple of weeks, and I'm like, oh, hey, look at me. I feel a little better. I'm laughing more with the meditation, honey. Thanks for telling me for the last 10 years I should be doing it, and me not listening. And I'm finally listening now. Look at me,
Oh, good. Yeah. I haven't yet found that blissful, enlightenment place, but I do practice it because I keep being told that's going to happen.
No, I mean, I'm 90% monkey mind, and then 10% I hit that moment of like that 30 seconds of like, ooh, hey, harmony, I feel it. And then all of a sudden my brain goes, then my to-do list comes back and all that.
Oh, yeah. Right? So. Oh, that darn to-do list. It never ends. It's never empty.
Well, anyway, all right, let's talk. So real estate, we didn't get into this. We can, we would have to take the origin story all the way to today, but I didn't catch on the one thing on how you had like successful exit, left all that negative juju back there at CNN and all that. And so now you've exited. A husband, Rich, has a successful, I think you said a gym and a coach and like, physical training business. So all that. Some point, a little real estate bug came up and bit you and Rich. When was that? What was that like? What happened? All that.
Well, like most people, we knew we would eventually invest in real estate because it's kind of obvious if you talk to people who, if you ever have a dinner conversation, what would you do if you win the lottery? People always, of course, a car, a boat, a house, all that. So we knew that we would. We just thought that we had to have a lot more money to do it. And we lived, San Francisco is not cheap, probably the most expensive place in the country.
Still is.
And, yeah, still is. So
was it like that back then in like the 90s? Was it still a crazy
always. That's why when people say that it's so expensive, it's like, I was born and raised there. I remember in the 70s, my dad bought a $70,000 house in Atherton, the most expensive neighborhood in the country. And people were like, oh, you live in Atherton. So that was in the 70s. And it just, inflation has changed all that. But it was always expensive. Always.
Because it's gorgeous, by the way.
Yeah.
Those that complain about San Francisco prices have likely never been there, or that mention, it's expensive. Go there. It's fantastic. It's glorious. It's a little slice of heaven on the earth. I get it's had some, pendulum swings and all that, but Liz and I went there a while ago. It's fantastic. So I get it. So, okay. So you had this bug to buy real estate, and then what was your first?
Well, kind of. But what happened is, and I'm sure you've heard this story and others have too. Everything was perfect. He was doing personal, professional coaching, business coaching. He'd come out with his book, Extreme Success. He was like at the top of his game. That was published by Simon & Schuster. They gave him $150,000 advance back then, which would be like $300,000 or $400,000 today. It was like everything was great. We had bought our first house. It was beautiful. It was my dream. 2 beautiful kids. And then on his book tour, he had just come back from New York on an interview and then had a big front page on USA Today, New York, all this stuff. Like it was just amazing. But he comes back, notices this freckle. He's a redhead, lots of freckles, but he noticed this one, goes to get it checked out. Turns out it's melanoma. He was, as you know, a bodybuilder. So he fried the crap out of his, I don't know if I can say that on there, but he fried his skin.
You can say it all on the show. Don't worry about it. Use all the words in the English language you want. You're not at the other podcast station that you're on. You're over here at Best Ever. So speak your mind. Go right ahead.
Well, he was a big bodybuilder, like 80s style, like Schwarzenegger. And he would just fry his skin. And of course, that caught up with him. Turned out to be melanoma.
It's from tanning.
From those tanning beds. Back then. Yeah, they
Did he compete with the bodybuilding?
Oh yeah. Yeah. He won.
Right. So you get all beefy.
Oh,
and you got to look pretty with you got to be tan too, right?
And oiled, all of it. I didn't know him then. I was fortunate enough to meet him when he was still bulky, but not so vain.
Get out of your system. Right?
Yeah. But so the doctor told him, we think this is spread. They did a bunch of tests. They saw these masses on his liver, and they told him he probably had 6 months to live.
Oh no.
And came home in tears, and Rich he's a warrior. He doesn't cry, but he walked in the door and was just sobbing because we had a 2-year-old, a 7-year-old, a brand new house. Everything was perfect. Yeah. And I was just like, no. I do not accept. Yeah, absolutely. Right. I don't accept this thought. You're going to be fine. But in the meantime, I was like, oh, what do I do just in case? The doctor's right. We had a $4,000 mortgage on that house, which today again would be probably triple that. Yeah, man. It was very expensive. We did the typical American thing of, wow, we're successful. Let's buy a really big, nice house and a really nice car, and let's spend all our money.
Let's spend all of our income on a house, right? Yeah. Okay.
Yeah. So I took that radio show that no one was listening to because I was trying to do a good news show and no one cared. And I turned it to how do you make money, and how do you make passive money? In the back of my mind, just in case the doctor's right, and I'm raising two kids. I've heard of it. I don't know anything about passive income. I don't know how to invest. I better figure this out. And I was like, wow, I'd be a single mom, no life insurance for us because Rich is a rock climber and a surfer, and when the life insurance people came over, they're like, so how high do you climb?
So what are your hobbies?
Yeah.
Climbing on rocks, going surfing, snorkeling, scuba diving, putting my life at risk on a daily basis.
They're like, how high? Oh, 5,000 feet at Yosemite. Oh, okay. Also, do you smoke weed? Yeah.
100%.
Do you do them together? Yes.
Daily.
Okay. This is
daily. Right.
So we had absolutely no.
I'm high right now, Mr. Insurance Guy. Yeah. Right. Yeah.
Yeah. So that kind of left us not a lot of investments. We saved 10%. You can blow through your savings pretty quick in times of crisis.
Yeah. So sure.
I just used what I had. I had a platform. I was a stay-at-home mom, totally had forgotten how to make money. It had been years since I had worked. And I had this show and I thought, well, I'll just use this. And I just started interviewing people who knew something about money. Anyone who wrote a book on money. I ended up getting a sponsor who was a mortgage broker. And in order to get him to pay a pretty large sum as a sponsor, we had to do mortgage stories. So I started to learn about the power of leverage, how to fix your credit, how just all sorts of methods that people were using leverage to build wealth. Yeah. And
what year is this?
2002.
Okay.
Mm-hmm.
Okay, keep going. I think I know what happens, but keep going. I might. This might be there might be a piece of the story I've heard, but keep going. Right.
I mean that's basically it. I was
going to say, didn't you bump into Robert in his early Kiyosaki in his early, when he was just starting out with Rich Dad Poor Dad and all that? Did you interview him on your radio show?
I met him before he wrote the book, and he was looking for coaches. Rich and I were pretty well-known personal and professional coaches at that time. Rich was part of founding the ICF, the International Coach Federation. His career had really taken off. So I had met him, and I was able to get him on the show right after he came out with Rich Dad Poor Dad. And it was then that he kind of explained, by the way, I had gotten this mortgage broker on the show, and I was doing all these stories on how leverage works, and our phones were just ringing off the hook of people who wanted to get a mortgage through Gary. And so he's like, I can't handle all this business. This sponsorship has been amazing. Can you just come work for me? And he pulls out 3 checks from his wallet. One was $10,000, one was $11,000, one was $12,000. He goes, I just made this today, because mortgage brokers were making stupid amoents of money back then. God. You could make 3 points on $1 million loan. That's $30,000 and do one every day, because it was so easy back then. You didn't didn't need anything. hardly any backup for anything. So
that was pre-Dodd-Frank, pre-2007, when they were just given, I remember those days, it was like you just had to have a heartbeat. And my loan officer would write up my application for me, if you know what I'm saying. And he would put what my income, I'll put your income down. It's okay. I'll do that. I'll put what your assets are. I'll write it all in for you.
That's exactly it. So I'm like, okay. So I got my license and I became a mortgage broker. And then my very first loan was $1 million loan. I made 30,000 on it. And we turned it in and the bank's like, oh, he didn't make enough money. And I'm like, oh, okay. And they're like, that's okay. We fixed it. He makes enough money now. I was like,
right. Huh. That's why we fill out all the applications in pencil. We can just erase that. We'll erase his income. That guy makes 1.5 million now, right?
Exactly. That's literally what they would do. And there was no backup needed.
He's driving a garbage truck, making 1.5 million a year. No problem. Right. Yeah. Yeah.
It had to sort of make sense. Like you had to say that he owned the garbage company or whatever.
Oh yeah.
But I came home and
trucks. Right.
Rich is so honest. He so much believes in karma. Like you said, he's a Buddha. I was like, honey, this is what happened today. My first day at work. What do you think? And he's like, what do I think? I think that's fraud. I'm like, yeah. And he goes, you can't do that. It's going to come back and bite you. And I'm like, that's what I thought. So I never made any changes for people. I would give them the documents and say, you fill them out. I'm not filling them out, but other people would just write it in.
The sins in that industry came from the top, There was a certain culture that I remember that was conveyed. Now, Liz and I got in 2003 to start investing. And I remember the loan officers would be like, well, let me run it by my boss, or like, I get it. And they would ask you what you made and ask you what your income was and what your savings was and everything like that. But it was like the whole thing about a no doc loan, right? The fact that was even allowed was not the loan officer's fault. That's all the way up to say, listen, we can get more loans done if there's less verification and less data to back up these statements we have in these loan applications. Let's just call it fact a fact. So it wasn't on you or whatever. It came from all the way up saying, let's dilute this thing and make it real easy that with the pen and paper to get whatever you want,
It made no sense. I was like, new to finance. My business was news, telling the truth about things, and here.
You saw The Big Short, right? The Big Short movie.
It was exactly The Big Short.
It's like, the guy's talking to a stripper. She's a stripper and she owns like 4 houses. It's like, I got a, this vacation house and a condo for my kid and I got this and I got that. And the guy's like, stop, we have to get like, this is insane. Yeah.
I kind of understand that because I know some strippers, they make a lot of money. They could probably own 4 houses. But
right.
Anyway, now it's OnlyFans girls who are like the multimillionaires.
It depends on in which facility they're dancing. But hey,
that is true.
Welcome to the Best Ever Show, by the way. So yeah. Anyway, now real estate investing. What was your and Rich's first rental deal cash flowing? At some point, somebody must have come on your radio show at some point and told you about not, the mortgage side or whatever, but the idea of holding real estate for income, light bulb goes off. What was that light bulb like? And what was the first deal that you and Rich made?
Well, it was I tried to make this sponsor happy, the mortgage guy, and then I became a mortgage broker. So we were trying to get more loans, right? So I just would interview people who were getting loans and they would talk about that. Oh, I bought this as a rental property. I've got cash flow. Oh, I bought this house and I fixed it up. I lived in it for 2 years, sold it, got all the upside tax free, all these strategies I'd never heard of. And I thought, how is it that people don't know this? And so I was so happy to be the one bringing this information. This was before podcasts, but our audience grew really fast. So they didn't like the Good News Show, but they really liked the How to Make Money show. And I liked it too, because I was learning. And then I had Kiyosaki on, and he was the one who helped me figure out how to do it, because I was making a lot of money, but not enough to buy something in the San Francisco Bay Area. And why would I? It would be totally negative cash flow.
Right.
So I just didn't understand that. But it was Kiyosaki, of course, the cash flow game and all this. And I played that game quite a lot in the beginning, who taught me the cash flow side of it, which Californians had no clue about. Cash flow, we have tons of cash flow in California, but it's of the negative variety.
Cash flow coming out of your pocket into your deal. Right.
Yeah. So it just didn't make sense. And then all of a sudden Kiyosaki's like, oh no, I've sold everything in Arizona, Florida, Nevada, and California, because those are what they call the sand states back then, where the prices had gone up 40% per year and was clearly a bubble. And he's like, I've sold all those assets at the peak. We know that these loans are going to come due. No one's going to be able to pay them. And he said, I'm buying in Texas because there's the highest job growth in the country, the highest population growth in the country, and yet the cheapest real estate. Like it was still 27% undervalued in comparison to wage growth. So he taught me that, and it just clicked. Then when you said how, when something clicks, it's like, oh my gosh, how can you lose?
I see it. Yeah.
So I jumped on a plane. I landed in Dallas. I met with the first real estate agent I could contact. She took me to a very expensive neighborhood and was like, oh, Californians love this neighborhood. And I was like, okay, fired. And I thought, how am I going to find somebody who can help me? Here's
a $3 million mansion. Here you go. You want to buy this? No, I do not.
I do not. Right. This is not what I'm looking for. I'm looking for cash flow, and they'd make up rental numbers and stuff. So who's going to tell me the truth? A property manager is going to tell me the truth, probably. So I spent an entire week in Dallas meeting with every property manager to fully understand who's renting, what are they wanting, where are they wanting to live, where's the demand, why are the phones ringing, and where are they working, like all the things. Who seems to have less stuff on their desk? I'd come into some offices where it was like, oh, okay, nope, they how could they even find their phone? And then I ended up finding a really good property manager who then helped me also find the properties, because I thought, well, gosh, if they're going to be stuck managing these things, then they probably want to help me pick it out. And I came home with 5 properties. This was a big challenge to our marriage because I forgot the part about asking Rich about that. But you have to understand, I was a mortgage broker and I could do no money down investor loans, as many as I wanted.
That's it.
It was nuts. So why not?
I know. I remember 110% investor loans back in the day, meaning like you borrow $100,000, you could walk out of closing with a check for $10,000, bring nothing but a pen and a smile to closing, and walk out with a check. Right. So I remember those days. By the way, I forgot to ask something. Rich with the melanoma. I know best ever listeners are all like, hey, you insensitive prick, Matt. You didn't ask to make sure Rich got over the cancer. I'm sure he did. You're talking about like 22 years ago. So not for nothing. I'm sure he's fine now. But how did that resolve, to make sure best ever listeners hear the happy ending to that story?
And I always forget to share that part because I just assume they know I'd be crying and not laughing.
He's alive now. Yeah. It's fine.
He is great. They chopped it out. It turns out it hadn't gone to the liver. He had masses. Who knows? Maybe he was miraculously healed, but he's alive 23 years.
Weed and rock climbing. The weed and rock climbing healed him.
Exactly.
Right. That's it.
But he gets a cutout every year. You should see. He's just a bag of scars. But he's hot. He's a warrior. He's supposed to have scars. So
that's it. Yeah.
Yeah.
Which is, some people tend to make those, I mean, that's just something like, I think we're just learning about, like in the US, about like from a health perspective, that just, detection is the key especially for cancers and stuff like that. And just some people are cancer makers. And so you just got to go and get checked, you get it detected, get it removed, get back, and just keep on keeping on and just get checked. So maybe he's just one of these folks, unfortunately, that has to get it checked and get it removed. But hey,
absolutely.
2025 and he's still with us. So God bless.
Yeah.
So now fast forward, you just went and bought up 5 rental properties in Texas without telling this poor man about it, right? So what did you buy? Were these were like small single families, like SFR kind of things? What were we talking?
Yeah. I just kind of trusted the property manager. I liked her. She's like, well, right now the best deal is new homes. You can negotiate lots of things. And so they were brand new homes in the $125,000 to $150,000 range in Rockwall, Texas, which is an A-class neighborhood, A-class schools. There was a new freeway coming in that was going to make the commute to Dallas like 30 minutes instead of an hour. So it was all the things that Kiyosaki had said on the show that just made sense. These are the exact fundamentals we use today: job growth, population growth, affordability, and infrastructure growth. So what I did then is still the foundation of what I do today. And I got to have Kiyosaki back on a year ago or so. And I'm like, do you know what an impact you had on me?
You remember, Robert? Yeah. Yeah, yeah. No, that man has caused so many people to quit their jobs and jump into real estate investing or change careers or whatever it is over the years. I quit my job in 2005 by reading Rich Dad Poor Dad, playing the Cashflow board game, the whole thing. And a lot of our best ever listeners right now have that same story as well. Maybe not in 2005, you're doing it as long time ago as you and I did, but at one point read the little purple book and said, "Oh, wait a minute, there's another way."
Yes.
So okay. So now I want to make a transition. So that's a great origin story. And now all of a sudden, not all of a sudden, but you and Rich have grown, have gotten involved in a lot of newer build things. Interesting. You said new build you bought in Dallas, because I know that is not something that you have shied away from. Now, as I know, you were doing a new build with your partners in Salt Lake City, and you've done other new build projects. So that seems to be a theme for your portfolio of build it and hold it for the longer term. Is that still your thesis for your investments?
It's just kind of whatever works, it just made sense to me that if I was going to be investing far away out of state, like how was I going to renovate an older home from a distance? I got small kids. It just sounded too hard, but a new house, I can do this. And it's going to be more attractive to my renters. It's going to have less issues. So it was just the thing that made sense. Then 2009 happened. And of course there was foreclosures everywhere. 2008, those homes did great. They stayed rented through all of that. Of course they're worth probably 3 or 4 times what they were then. But 2009, there weren't new homes. No one was building new homes because there was millions of foreclosed homes on the market for a third of the price. So home building just came to a complete stop. Plus home builders got absolutely buried during 2009. So it's like, what do we do now? And it's like, well, let's get some foreclosures. We can buy the same houses. Maybe they're just a year or two old, but they're foreclosed. Yeah. But how do I do it? It was the same thing. Like, I've got kids. I'm busy. Now I'm running a business. Our business kind of became built out of necessity, where I would talk about everything I was doing and how I was investing. And again, our phones would ring off the hook. I want to do that too. So it started where I would just do loans. It's like I'd find a 10-pack of homes in Dallas and do the loans for that person. And then I end up going more on the referral, the agent side, helping people build their portfolios nationwide. But like, now what? There's no new homes to build. And these are busy professionals who don't have time to do it themselves, but there's deals everywhere. So what do we do? And that's when I started to work with local teams to help us buy them, renovate them, and make them rent ready for our Californians at huge discounts. So I think I was one of the first to sort of create that turnkey model of these busy doctors and tech people. They can't buy foreclosures and fix them up in Tampa or Indianapolis or wherever we were, but we'll create all the systems and teams so that it's done for them with people that we trust, that we, and so that we had to pivot. And it was at that time that a listener of my show contacted me and said, "Hey, I've been listening to you for a while. I'm a retired developer. I've been doing it for 40 years, but I can't be retired right now because there's too many deals." And, he said, "I found a 27 waterfront brand new townhomes in Portland on the river waterfront in the Pearl District, the hottest part of town, that are foreclosed. They just need to be finished out.
Oh boy.
We need about $3 million. Can you do that? Can you raise $3 million?" And I was like, "I don't know." And so I sent an email out to our list of 10,000 people, and we raised the money in about a minute. And then some very kind person said, "What you just did is illegal, and you probably need an attorney, and you need to do this properly. You need a PPM and an operating agreement." It's this thing called syndication, which I knew nothing about, but I learned very quickly.
That's so funny. That's so funny. It's good that somebody's looking out for you.
Yeah.
So then you syndicated the right way, resend that email and everything like that. This is a solicitation, 506C, all that kind of stuff.
Because there was no 506C yet. It was pre Dodd-Frank. So it had to be a personal relationship, and I blasted it out to everybody. So I did it all wrong, but I quickly reversed it, and we were able to start syndicating and getting
the right way. Yeah.
Oh my gosh, getting insanely ridiculous deals. Yeah.
That's great. So I want to, again, here's my pivot. I've learned a lot from you over the years, and I know that you really do a good job watching the tea leaves of where the economy is going. You've done a lot of different deals in different asset classes, different markets. You've seen a lot of different cycles, as I have, the 2007, 8, 9 cycle, the run up of 2009 through 2020, the COVID thing, and then the COVID post COVID changes and interest rate hikes and all the stuff. Where are we at today? What are you seeing in the investment economy? You can certainly pick an asset class if you'd like, but I just wanted to give me Kathy's perspective of today's real estate economy, and then we can start unpacking and talking about where you're seeing opportunities from there.
Yeah, well, what I learned from that first mentor that I first syndicated with, where we were in the depths of the darkest recession anyone had seen in our lifetimes.
Yep.
And he was so calm. And I'm just like, why are we going to do this multi-million-dollar deal when the US of A may not be here anymore? We were stocking up on food, and like guns and all the things, because it was all, okay, America's going to.
I remember
that whole thing. And then every year I started to notice there's always something that we're supposed to be afraid of. And he remained calm the whole way. In fact, for him, it was like, okay, I'm coming out of retirement again because everybody's scared and there's nothing but opportunity. So
Right.
I think it was really his influence to say, don't listen to the headlines, or, things are dire, but there is an opportunity, and what is it? And dig through that. It's almost like that good news show. I was like, try to find the good in all this bad. It's like, try to find the good and the opportunities also in all these changing times. And we've had to change it up over and over and over again because times are changing. But we were also able to find, again, the opportunity. That's how companies are born. That's how entrepreneurs thrive. Mm-hmm. So coming to today, what we have is a few things. We obviously have the what is it? The OBBBA, the One Big Beautiful Bill Act that passed.
Whatever it is. Yeah. The big thing that passed. Right. Yeah.
Extremely controversial. A lot of things to not like in it. But if you look for the good within that, there is some for real estate investors. Mm-hmm. The big one being, of course, the bonus depreciation, where you can write off things that have a shorter life than the structure of the home and take that deduction in 1 year. Kind of like we could do that with cars for a little while. You could buy a new certain kind of car and get 100% of that deduction in year one. That came back. So what's that going to do for real estate? It's really going to cause it to boom again for anything that can be depreciated that way, because people always want their tax deductions. I really think that there is this window right now of opportunity because people don't quite get it yet, but they will. And when they do, it's going to be mayhem again. It's going to be multiple offers again. It's going to be prices going up again. So right now, and it is almost too late, but it's opportunities there to jump and to look for those deals. That's my opinion. Let me say back to you.
You think that we are at whatever the bottom of the market? Like if something is valued at, $1 million today, you think that because of interest rate positions and those kinds of things, that property would be worth well more than $1 million in 3 years, 5 years from now?
I mean, it depends on the property, but let me just give you an example. I'm so sad I didn't have money ready to go, but there is a property up the street from me in Malibu it's a 3-bedroom, 2-bath, totally renovated on a hill with expansive ocean views. It's absolutely beautiful. It was on the market for 2.2. Somebody pulled out. They got scared. Then because of that, people get scared. Why'd that person pull out? And then blah, blah, blah. So it's been on the market and it's going for 1.6 million. Oof. This is a property that it's worth so much more. And had I had the cash ready, I would have bought that in a hot second, because as a short-term rental, then you get all those bonus depreciation. It would be, who doesn't want to come to Malibu and have sweeping views with trails everywhere? I mean, it's those kind of opportunities that it's just this pause. And it happens a lot where there's this pause where people are scared and then there's a lot of inventory and prices are going down, but I really don't think it's going to last. So that's just my opinion. And that's also, you said, so kind of what do you see as next? We've also had the same experience on some multifamily deals that look amazing. We want to do them. But as you and I talked about before the show, they're such good deals that you have to have cash. You have to be ready to go. And as a syndicator, it can take 2 to 3 weeks just to get your documents ready. 100%. And then you got to start raising money. And it's just, you're going to miss out. So we are starting a multifamily fund. So we've got the funds ready. We're ready to go, and we're going to snatch them up before. I mean, there's lots of competition already, but you really do need to be ready to go.
What I remember in 2000, I bought a reasonable amount of deals, not multifamilies, but I bought a lot of single family in 2008, 9 that I did fix and flips and BRRRR strategy. This is back in the day when you could do the BRRRR strategy like nobody's business, man. You could buy a property for $50K and go and put reno into it and, fix it up, and maybe all in cost basis of $100,000. And you would get a valuation of 175 all day long because not that many people are doing it. Tenants are gonna come in and absorb it for rentals and stuff like that. So we did a lot of BRRRR. That's how Liz and I built a lot of our portfolio in the early, in the late 2000 single digits and early 2000 teens. But all those properties that we bought, almost none of them were listed by realtors. These were off the market, short sales, wholesales, everything like that. And do you believe that those that are finding good deals today are those that need to be doing the same thing, kind of looking through alternative channels for maybe bank-owned properties, or for properties that banks are looking to unload, or properties that there's situations going on, maybe direct to seller kind of stuff? Is that the best way to get good deals today? Or is it just, kind of talk to your local broker contacts and see what they have listed?
I think all of it. I mean, right now you have, just like I said, a stall. It's a moment. It's a pause in the market. Yes. And so there's a backup on listed properties. They're starting to back up. There's more inventory. And when there's more inventory, you can negotiate. So I think on-market properties are a great deal. I think off-market are always a good deal. Whatever you're good at, the most important thing is knowing your market. So if you asked me to tell you if there's a good deal in New Jersey, I wouldn't know. I don't have a clue. But I know that you guys know parts of New Jersey that, like the back of your hand, you would know. Just like me, you might think, well, 1.6 million for a house, that's a lot of money. And I know, because it's my neighborhood, that's probably half price. So it just most important is really knowing your neighborhood, focusing. I've been telling my kids, I've been trying to get my youngest, who just got proposed to, just got engaged. I saw on Facebook.
Congratulations.
So cute. Yeah. So cute. They would like to buy their first house. And they want it to be in San Diego, which is hilarious, but that's fine. Like, what you need to do is start to understand the market. You need to be on the MLS or on realtor.com or whatever every day and pick a neighborhood and just start to get to know the area. Their idea is to build an ADU because that's a big push in California to buy, to be able to put ADUs on property, and they would live in the ADU and rent the rest out. So it's a good plan. Okay. But now you need to find property that has a big enough yard to put an ADU. Yeah. And just learn it. Just learn it so that you know in a second if it's a good deal or not. Because like we talked about in this kind of market, if it's a good deal, any market, if there's a good deal, you have to be ready to pounce.
What are you pulling out your Kathy crystal ball, which I've seen you pull out before, and I've seen you be pretty much right when I hear you say things. So not to put you on the spot, no pressure to be right this time. Not. What do you think will be what pushes residential real estate values up? I would probably correlate multifamily and singles together in some way because it's all places people have to live, right? What will be the breaking point that will push valuations? If we are where we are now, at some point, there's going to be a break point that's going to take us up. What do you predict will be that break point?
Well, everything always comes down to supply and demand. If there's not enough supply and more demand, prices go up. If there's more supply and not enough demand, prices go down. It's just economics, basics. So I think it's really important to understand that the largest generation of millennials, if you look at a boa, you look at the elephant going through it or whatever, the largest part has gone through is like age 30 to 34. So a lot of, if we follow that generation, it's really important to see what they're doing, how they're spending their money. It used to be my generation, the baby boomers. I'm on the cusp. I'm barely a boomer, but I guess I still am. So I'll just say it. Don't hate me. But it used to be what are the boomers doing? Because they were the largest group. Now they're not. The oldest ones are dying off. So it's the millennials now. So what are 30 to 34-year-olds doing? They're not maybe living in apartments as much as they were. So there was a big demand for apartments, of course, when they were in their 20s and certainly when they were in college and after college. But now that group is forming families, having kids. They would like to have a yard. That's why one of our syndications is a build to rent community, because it's still a rental. It's kind of like an apartment. It's a horizontal apartment, but people at that age group still have the things that they want, which is the yard. And especially after COVID, people really like to have yards and not too many,
right.
Not neighbors too close, right? But with that said, and then we've got the immigration issue. Like, where's that going to land? And we know that there was a tremendous demand for apartments from, this massive open door policy of anyone can come to the US and then they can rent apartments. And guess what? Now we have more of a shortage. I don't really know where that's headed. And I don't, as headline-y as it's been, I don't really know how many people have been deported. And it's not probably anywhere near what I've heard could be up to 10 million people that came in. So the immigration question is going to really affect this supply demand situation.
You can't logically remove 10 million people from the US. You can't.
I don't think so. Yeah, I think it's a lot of it's just meant for headlines. I don't know. I don't want to get too political.
I know, right? Who wants to know that?
Yeah.
Do you think that interest rates will play a factor in the new real estate economy that may occur in the next 6 months to a year, or whatever it may be? Like, will Fed starts dropping rates, and that's like kind of drops the dime on the economy. Like, oh, wait a minute, it's back in fashion now. Now I can borrow money in the 5s instead of the 6s or the 7s. Do you think that will cause a injection of interest into real estate again?
Yeah, obviously, President Trump has been pushing the Fed to lower rates. And when we're talking about those rates, we're talking about the overnight lending rates that is more affected, where commercial loans are more affected by that.
Yeah.
So if Trump succeeds in replacing Jerome Powell next year and somehow forces, if rates go down on that side, then you'll probably see more activity in the commercial world, more builders coming back in, just more activity in the commercial space. However, in home loans, that's really tied to the bond market, which Trump cannot control. Yeah. And he got a slap in the face early on, when he first announced tariffs. The bond market rejected that concept.
Was not happy.
Not happy. And I think he had a really big realization of he can control a lot of things, but he can't control bond investors, and bond investors control interest rates. So that's what he gave the 90 days. Just 90 days. We're going to figure out the tariffs then. And then all of a sudden bond traders came back in. They're like, yeah, we like this. And they bought bonds, and the US government has to sell bonds because we're in debt. And if we don't sell our bonds, we can't refinance basically our debt. We have to do it. Mm-hmm. So, in answer to your question, I generally, and nothing has been normal, nothing has been traditional, but generally, the Fed will lower rates when they need to stimulate the economy, and they need to stimulate the economy when things aren't going great, when you're kind of seeing deflation, when you're seeing job losses. Then they're like, oh, dang, we need to make money cheap so that people will borrow it, and that'll stimulate things. Yeah. But to lower rates when the economy is fine, the job market's been pretty strong. It doesn't make sense. Like, why would you do that? It would overheat.
Yeah.
If you lower rates when the economy is doing fine, then you overheat it and it creates inflation, and then you've got a bigger problem. Yeah. So then you have to raise rates. So it's like you can't really mess with it. The Fed, as much as I'd like to criticize them, they're focused on two things, and it's not politics. It's inflation and it is jobs. Those two things. That's it. And right now there isn't really a good reason. Some people say there is, but we'll see. So if he wants to lower rates, that would technically mean that the economy's not doing that good. So if the economy is doing good, then you keep rates right where they are or you raise them. So I can't tell you what's coming, but I can tell you that we have a president who's pro-growth, which would have me say that for at least the next 3 years, we're probably going to see growth.
Yeah. Yeah. And I think I agree with you. And I think that when there is a reason to drop rates, I think that it will, for whatever reason it may be. I heard Powell say that he actually would have dropped rates in July had there not been the question around tariffs, right? Because it's still an unresolved matter, right? I'm sure there'll be some backroom discussions and all that. And the Fed meets again in September. I'd be willing to bet you lunch that he drops it at least a quarter point in September because it's just not that we're due, but they've been up for a while. Inflation has been curbed. It's nowhere near where it was. And so I'd be willing to bet that starts to drop. And then I think when that does, I think it creates a domino of things starting to open. And that's when maybe rates come in. One thing that you didn't mention, I'm sure you would agree that, and this is for best ever listeners too, building permits for residential housing, apartment buildings and single family homes are near zero. Nobody's building right now. And that goes back to Kathy's comment on supply and demand. So we're not supplying anything more right now. And so that's going to cause, if there becomes more demand, and there will be, I think that causes prices to go up. It takes 2 years? You built a lot of houses. It takes year and a half, 2 years to build a house. So if we start pulling permits in September, we're going to be left with the housing stock we have in the US for the next 2 years. And so it's going to cause, I think, a price run up until developers can catch up and start putting new inventory on the market. Would you agree with the lack of the lack of new builds going on being a factor in your supply demand conversation?
Oh, absolutely. I mean, I follow John Burns Real Estate Consulting, and they just do really in-depth research on permits. And one of the things that they said is the build to rent community. They're not building. They just sold off their land. They're not doing those projects. So we are, and we're very excited that in a couple of years, we're going to be coming out with this. We'll have the houses ready, and we're far ahead of others in that sense. Yeah. I know that in the multifamily, there was a little bit of oversupply in multifamily, and that's been absorbed. So, but more buildings stalled. So that could also mean, I've also heard that in a year or two, there would be a shortage of multifamily as well.
Yeah. Well, it's like real estate. When you build it, it's like you drop a little tiny pebble, and it's like one of those things where it's like you're dropping a pebble maybe into a frozen lake, and it takes a while for that lake to defrost and for the ripples to work its way out. So there is a time delay in, things changing the economy that cause development of new real estate, that then that real estate is there to get absorbed. And then once it gets absorbed, it affects other things in the economy. You're talking years for those things to work their way out. So I think I agree with you that that's a factor as well. I've also heard the correlation between C-class, a lot of the older stuff that's built 50s, 60s, 70s versus the new construction that's out there now. The data that I saw, I was at Best Ever Con, and there was an economist that was presenting and all that. And he was saying that the gap between C-class growth and Class A new construction growth has never been so disparative and separate. That C-class is actually fairly flatlined in growth. It's not growing like A-class is, because A-class is newer stuff getting built, getting absorbed, getting pushed up a little bit. But the C-class rents have been fairly stagnant. Do you have thoughts on what the future of C-class housing in America ends up being? Like more of the workforce, 1960s, 70s apartment complexes, maybe single family homes that are in need of a big reno. Because it just seems like homeowners don't want to do the big reno anymore like you and I did back in the day. And there's been a big run on the pricing on C-class multifamily housing, rightfully or unrightfully so. Where do you think C-class housing ends up over the next couple of years?
Yeah, it's going to come back to that supply and demand. But I think what a lot of multifamily investors have learned is that C-class apartments are costly. You might get a good deal on the front end, but they're older. And because they're older, it's just a higher CapEx. And so as long as that's being, that number is put in the pro forma of an accurate number of what it's going to cost to maintain that property, I think a lot of people have learned the hard way there. So as far as like demand from people, from tenants, that's what they can afford. That's what they're going to want. But can an investor afford it? Is it going to make sense at today's prices, with today's insurance rates, with all the stuff that's going to break? I mean, I have a nightmare C-class apartment story that I don't want to freak anyone out with, but stuff breaks. Yeah.
You and I could we'll do that over what you and I should have. We'll have a cocktail hour best ever show another day, and we'll just tell horror stories, maybe around Halloween. Okay.
Yeah. So I think that's the main issue, and then you've got a tendency, we see what's happening in New York City with the mayor of sort of those terrible landlords are just ripping people off. Boy, okay, what's going to happen when you lose all your landlords? Then what happens for the tenant? Yeah. So it's just interesting times. And I know for me, I would be very cautious about C-class unless you've really done your numbers right and you really know how much it's going to cost to maintain that building.
It has to get resolved, because America can't afford to have our older housing go and just deteriorate into the ground. We still need housing. We still have a housing deficit. Perhaps C-class is due for a bit of a correction so that a new owner can bake in the R&M, the CapEx, the things that need to happen, the budget for the crushed sewer line that's going to happen, and the underpinning of the foundation. And maybe there should be a budget as a C-class owner that, okay, like my company's buying hotels right now. A hotel pretty much gets rebuilt every 7 years,
Really?
Because of the wear and tear. Because of the PIP. Because of the PIP that Hilton Marriott makes you do. They make you pretty much take that property, and redo the whole thing, exterior, interior, everything, to the tune of $20,000 a door every 7 years. Right. Yeah. Now just budget for that. It's all good in the hood if that's in your numbers. If your numbers, and believe it or not, with all that, with having to spend $20,000 a door every 7 years, I can still show you a hotel deal that'll produce 7 to 10% cash on cash first day you buy it. So they still make money. But the difference is the business plan for a hotel includes major facelift upgrades on a regular basis. You don't have Hilton and Marriott coming down on you on your apartment building, telling you, hey man, I need you to set aside money because you're going to have to replace that fridge. That roof ain't gonna last forever. That HVAC you got in that closet over there, that's going to die at some point. So I need you to set aside, I don't know, $1,000, $2,000 a unit per year, right, in CapEx reserves. If owners did that, and if they had the cash flow, they could do that. And if they bought at the right price point, they could do that. 70s vintage assets could last another 50 years because you pretty much have a brand new asset every 10, 15 years, right? That's the way we need to start modeling these things. You can't run a 70s vintage asset with the same CapEx plan that you did for a 2015 vintage asset. No. They just don't function the same way. Yeah. So I'll step off my soapbox now. Let me transition with you, Kathy. You found Texas in Dallas, Texas. You hopped off that airplane 2003, 4? What year was that? Do you know? It was 8 or 9. It was right after the crash. It was like 2009, right? Okay.
2004.
Okay. Yeah. Got it. That's right, because you're right. That was pre-Dodd-Frank and all that jazz. You're right. You're on more. Okay. What is the next Texas? What market in the U.S. are you seeing? And don't say Texas. What market? I've read you and I have debated over your U-Haul reports and stuff like that. I know everybody's moving to Texas and your U-Haul stuff and everything, but there's other markets that are probably sitting 25% below in the U.S. Do you have a prediction on where we will see that type of growth? That Texas did over the last 20 years. Where do you think it'll be?
Well, Texas and Florida really stand out and have stood out because of their no state income tax. So you've had, companies moving there, you've had retirees moving there, you've had like just lots of people moving to, obviously with New York, possibly wanting to tax, whether it was to tax all the millionaires, you're going to see a lot of more millionaires leaving for places like Florida. And so those two markets seem to just keep growing. There's more opportunity there because there's a little bit more inventory. But there are some areas like Oklahoma has talked about eliminating property tax. And if they do that, then Oklahoma will boom even more. We really like Indianapolis, I think, is an area that continues to grow. And you have, I don't know if you saw the mention of, was it Roche? That a lot of pharmaceutical companies announced that they're going to bring their operations back to the U.S. We know that chip manufacturing is coming back. There's a lot of reshoring happening and onshoring because of the tariffs that could create incredible opportunity for different markets. We still like Cleveland. We like Columbus, Ohio.
Columbus, Ohio. Is she going to say Columbus or not? Because I've heard Columbus, Ohio, and I've seen there's a lot of tech coming into Columbus. I mean, listen, think what you will about the tariffs and about President Trump. Again, you and I are not talking politics, but if the tariffs do what they're supposed to do, which is to bring jobs and bring economy back to America, if that's the case, you cannot fit all those jobs in the state of Texas and in the state of Florida, right?
Yeah.
We need other places to grow and flourish with jobs. You just mentioned Indianapolis. That is the first time I've heard that city mentioned in a very long time. And I love that we're talking about American cities that are not, again, God bless Austin, Dallas, all those places, but that are not like the darling cities that everybody talks about, right? Our company's looking at a deal. Believe it or not, I'll give you a town you probably haven't said the name of in a while, Wisconsin. We're looking at a deal in Wisconsin right now. And in Milwaukee, Wisconsin. Okay.
Yeah, no, I think Milwaukee's going to do really well.
Milwaukee. It's beautiful. It's but it's a town that nobody talks about.
Right.
But it's quietly, yes, it's not growing by 10% a year, but it's quietly growing at 4% a year over the last couple of years. And there are jobs coming in. There's not enough housing. And there's other American cities like that too, that I think are going to likely, the jobs are going to outpace their housing growth. And that's how you end up with another Dallas, Texas, as you said, Yeah,
that's it. Like a lot of the builders don't want to go to those towns. So they're going to the Austins, and that's why Austin got overbuilt. So that's why Cleveland was starting to see, not Cleveland, Cincinnati saw like 20% housing price growth a couple of years ago because builders just weren't building there. But there was more jobs than
there's jobs coming in, and that. So I think it's, what it is. Maybe this is the bottom line for the best ever listeners. You guys follow jobs for housing. If you're doing residential, if you're involved in residential housing, period, people do move to cities because they're amazing, because it is San Francisco and it's gorgeous and it's beautiful and the bridge and the wineries and all that stuff. But people also move to places because of jobs. And so if you can find a town that has good economic incentives to encourage economic growth, there's chip plants being built in the US, Kathy, right? Like, so we're going to start do this wacky thing, like making chips here instead of importing them from China and everything like that. So find out where those factories are being built. Find out where other factories are being onshored back into the US. They are in Austin, but other places too. So that's maybe your tea leaf, best ever listeners, to find out where you want to consider to do your investing too. So Kathy, I love your idea. Best ever listeners, do what Kathy's doing. Go and tell your investors. By the way, how do you get investors interested in this fund you're talking about? You're like, okay, we're going to go and get a fund going so we can go and jump on opportunities that might show up. Give the best ever listeners a brief conversation you might have with an investor to enroll them in the idea of, let's go ahead and have money ready for Kathy when she does find an opportunity. Because a lot of best ever listeners may, like you, want to go and get those funds ready for opportunities to show up. How are you doing it?
Well, we're going to show all the deals that we had to pass on and let them know our buy box. This is what we're looking for. This is what we couldn't get. This is what we hope to get. And we think there's going to be a lot of opportunity. So
look what we just had to say no to.
Yeah. Look what we had to say no to. And then we decided that for the investors who are trusting us and putting up their money before we found the property, they're going to get a higher return than those who come in later when we've already found the property. So it's just a higher preferred return for the first group.
I see. So like a different share class, like an early money, like a founder's share class.
Yeah,
and
founder's share. Yeah.
That's not a buddy of mine gave me that one years ago. I was like, ooh, that sounds prestigious. I want founder shares, right? Yeah. So they create founder shares and then create the shares for folks that come in once the deal's found, right? So I love that. So best ever listeners, there you go. According to Kathy, according to me too, perhaps now's the opportunity. Get in before the tsunami hits, right? So Kathy, for those that want to hear more about you, that want to check you out, what are some outlets? Let's mention your podcast, other vehicles you've got out there that folks can reach out to you through.
Yeah, the podcast, the same one that's been around for 20 years, The Real Wealth Show. I also have Real Estate News for Investors, which is just like 6 minutes of updates on what's going on in the news. And then realwealth.com is our website where you can find out about our teams across the country who can help you find turnkey rental properties and also our syndications.
Love it. Love it. Guys, check out Kathy Fettke. My good Kathy, I am really grateful to call you a friend. I've known you for many, many years and that. So I always enjoy our conversations. Thank you for joining us on the Best Ever CRE show. I'd love to have you back on maybe in a quarter or so when you and I can see if we were right about Powell dropping rates in September.
Okay.
Back on and we'll see if we were right. Okay.
That sounds perfect.
Until then, thanks for joining us today.
Thank you.
Guys, great conversation with Kathy Fettke. I love having conversations with Kathy Fettke. She's just such a phenomenal human being. Really grateful that she was able to join us for a bit here on the Best Ever CRE show. Guys, make sure you join me next Friday. Make sure that you like this episode in whatever podcast format, subscribing platform you are on. Make sure you like this show. Make sure you recommend this show to a friend. If you got anybody else in your network that's maybe a passive investor or maybe wants to hear where things are going, as Kathy talked about today, share this episode. Spread the word of the good things that are being said on this Best Ever CRE program so we can get ourselves more listeners, more eyeballs, more people talking real estate shop. So share this episode around your network. Share it with a friend. Until then, guys, come see me next Friday. Have the best ever day.